missed the market close. Is the mic muted? The mic is muted. Okay. Hold on. Give it a second. Okay, are we back? Yes. We're good. Yes. Okay, we should be good. See, this is, you take one morning off, and then boom, you mess up anything. Anyway, we are back. Thank you everybody for being here again. I'm sorry I missed the market open this morning. For those that didn't know, I said yesterday we would be missing the market open. We had our third guest on basis points. That episode will be dropping tomorrow, so I think people will be excited for that. I think you guys are going to really like this episode, but we had to take the morning off in order to be able to record it. But we're back. We are live, and well, we got a lot to talk about. Not only do we have a bunch of earnings after the bell, Costco and Marvell. I think Marvell is going to be the more volatile one. That's in the semiconductor industry. You have Costco, which moves up or down 1 or 2%. You have Gap, consumer company, Rumble, social media. So we'll see how some of those earnings play out. But more importantly than earnings, we have a lot of headlines that have happened, not in the past 24 hours, in the past 5 hours, that have kind of defined how the market is playing out. I mean, so many things have happened over the past day. And what's crazy about the things that are happening is that it's second by second updates that are changing the entire trajectory on how you think, not only about the stock market, but specific sectors in the stock market. So what happened yesterday? We had a really green day, blistering green, one could say. It was an exciting green day after 2 days of choppiness and red. What do we get on Thursday? After a green Wednesday, we get down 1% on the S&P. We were down even more than 1% on the S&P a couple hours ago. Now we're kind of recovering, but kind of recovering is only back to 679.44. I mean, we were pushing 687 yesterday. So it's quite incredible the way the market is turning out in terms of reacting to these headlines. And I quite frankly think that the headlines are triggering more algos that create reactions, because if you take a look at Nvidia's chart today, which is just unbelievable. We'll talk about Jensen's quote from yesterday at the Morgan Stanley conference that I thought was really exciting. Jensen basically said, hey, you can't hold the stock back. The stock freaking pumps to 184 from 177. Then today you get a headline from Trump about AI chips. The stock goes from 184 to 177. Now it's back at 182. I mean, it is a lot of short-term reactions that are causing people, hedge funds, institutions to instantly make a decision, then not make a decision on how they think about any sector or company, bullish or bearish. And you're seeing that in the market. CoreWeave, that's down 6%. That was up 7% yesterday. Amcor is down 3%. SMCI is down 2%. Micron's down 2%. South Korea was up 12% last night in the futures after being down 20% for the past 2 days. Now it's back down 6% tonight on EWY, which probably implies closer to an 8 to 9% swing to the downside on Kospi, which is the South Korean index. I mean, it is just incredible seeing these reactions, and we'll talk about all the different headlines that are creating these reactions. Thankfully, Bitcoin at least above 71 right here, down only 2% on the day. It was almost pushing 74. Bitcoin at least holding 71. It was getting really close to go back below 70. So I think it's nice to see that momentum. Obviously, Robinhood got hit as well because Bitcoin fell, but even Robinhood, last time I checked it, it was at 78. Now it's at 80. Even though it did hit 78 at one point today, it did hit 85 last night after the announcements that that Vlad presented to everybody. And we'll talk about the Robinhood event later. I thought it was a great event. I was there with Roy. You guys probably didn't see me on the stream. I was in the chat though in the stream for anyone who saw me. We were in this like section in the front, and I thought it was a great event. So we'll talk more about those products. But Robinhood right there, $80, that's down 2.5%. You got Nike, that's down 1%. The one sector that's really taking off today versus the sector that's in decline, SMH is down 1.4%. That is the semis. Sector that's up, IGV. Retail has been buying the crap out of IGV. We've looked at multiple charts over the past couple of weeks showing that the largest sector of net buying in terms of what's happening across retail, not individual stocks, but largest sector, largest individual sector that's being bought is SaaS. Retail is basically calling a bottom on SaaS, and you're getting a lot of SaaS names, whether it's Adobe, that's up 3.5% on the day. Adobe was stuck almost below 260 for the past couple of weeks. Salesforce finally breaking above $200. You got TTD, the CEO bought $150 million worth of stock. Like, I couldn't believe that last night. Obviously, the thing is up 18% on the day. Now, they also had a potential OpenAI partnership. That's more of a rumor, not confirmed. But yeah, two really good pieces of news, OpenAI partnership, and then a CEO buying $148 million of your stock. Like, I don't think we've seen an insider buy at those levels in a very long time. And TTD is another SaaS name. So you're seeing a lot of SaaS momentum, which is really good to see, potentially getting a bit of divergence from semis to SaaS overall, if you do have any allocation in SaaS, then you're doing well. Palantir is down on the day for different reasons. We'll talk about the different stuff going on with Anthropic, but no, Palantir is not even down. When I looked at it 20 minutes ago, it was. Now it's back to almost break even, 153. In 10 cents, it's going to be green. It hit 149 today. So you got a lot of SaaS names that are continuing to hold up that momentum, and a lot of broader growth stocks names that were down on the day. Rocket Lab was at like 67. Now it's at 69.87. It's almost at 70, which is not too bad. So what were the major headlines that kind of caused all of this to happen today? And that played out. Also, Broadcom, yup, they crushed earnings, like demolished it. Broadcom should be up a lot more than this. I know it was pushing 340. Now it's at 330 because all the semi sold off. But this is one of the names that actually stayed green on the day, even if it's not as green as it was, up 4% right there. If you own Broadcom, you definitely don't have a reason to sell based on those earnings, as they are going to continue to keep crushing it. So two things happened today. Number one, and if you were, watching the markets around 1:30 p.m., this is the announcement that we had. Also, yeah, Bill McDermott bought his own stock. So you're getting a lot of these software CEOs not only buying their stock, but they're also initiating buyback plans like Salesforce 50, basically telling the market, hey, you got this thing wrong. AI is not going to kill our business. So at around 1:30 today, Trump admin, the administration, kind of, this is, not anything that's official, but this was what made the headlines, began to plan a rule, theoretically, that would require licenses for AI chip exports worldwide. Essentially, what does that mean? Nvidia, AMD, Broadcom, if they are selling chips to Singapore or to Thailand or to India, they would need to get a license and be required approval in order to sell those chips, which, quite frankly, that makes no sense. Like China, we get it because they're like our biggest adversary. Obviously, Russia, we get it. But like, selling to the United Kingdom, like why does Nvidia need to get approval from the Trump administration? It feels like a worse version of the Biden diffusion law, which Trump ended up overturning. So this felt like a nothing burger. Nvidia went from 183 to 177 on this news. And remember, this is the same Trump who spent months in 2025 trying to get the Saudis to buy millions and millions of chips. So it is very weird for the administration, which needs these chip companies to do well. If they don't do well, then the stock market's going to take a hit, because right now the stock market is being held up by the semiconductor sector, to try to impose rules that make it harder for the chip companies to do well. So quite literally, I think, I'm looking at Nvidia's stock when the headline comes out and I'm just seeing it fall, and I'm almost laughing because it's like, this is not bearish. If anything, this is probably a procedural, logistical mechanism that the administration is setting up to potentially just monitor how chips are being sold across the world. But this is not banning them from selling across the world, except China, which inevitably is, Nvidia and AMD are going to be allowed to sell with a 25% tariff. So, now Nvidia is recovering. And if you took advantage of that dip, you got to get a little bit cheaper. Same thing with AMD. But at the end of the day, these headlines are running the world, even if they don't necessarily have a meaningful impact on the broader market. And then what's the other reason we had an ugly day today in terms of 1% down on the S&P? Oil. Oil has hit its highest level all year. You got Brent at 85. You have WTI crude at 80. It is now up 8% on the day. And year to date, it is up 40%, which is also not the best thing for affordability. That is not the best thing for the cruise lines. That is not the best thing for the airlines. If you take a look at all those stocks, they are plunging today. Not as bad as they were on Friday. And again, getting a little bit of recovery. Delta was at 59. Now it's at 61. You had JetBlue that was down 10% of the day. United Airlines. But obviously, those are the hardest sectors that are hit by oil prices. But all of us are hit by oil prices. I started seeing people comment under this that their gas went from like 250 to 350 or 315. Someone said it went from like 330 to 375 in the matter of the past couple of days. And the national average right now is at 311. It used to be at $3. So I think the Trump administration understands that they have to continuously tell the market that they have oil under control. And there's no way they can't have oil under control, because there is no affordability in this country, given the economic realities we're facing, if oil ends up getting to the levels that it's getting. In fact, we're going to look at some macro analysis later, but I was going through a couple of charts today. If oil actually does get to levels that would be aggressive, we're talking about 10% increases right here. If you take a look at this chart, any 10% increase on crude oil from these levels increases core inflation by 4 basis points and headline inflation by 20 to 30 basis points. It also reduces purchasing power by about 2.3%. It is just not good for oil to go up. Now, you might be asking, well, why did oil go up today? Because we had some more refineries that got hit. We got some more countries that came out and said, hey, certain refineries in certain locations, we're going to be shutting down production. You did have some good news about Iran coming out saying we did not close down the Strait of Hormuz. You also had China coming out saying, hey, we talked to the Iranians. They're going to let us get their oil from the Strait of Hormuz. So you had some good updates in terms of the Strait not closing and not having, catastrophic issues in regards to oil. Nonetheless, the market is pricing in that there are broader issues. And as a result, you're seeing those oil prices go a bit higher. Let's get an update on the Iran war, and then we will get into this close in the next 5 minutes. VG and some of these oil stocks, XLE, have been a good hedge as well. Obviously, because as oil prices go up, those stocks get momentum. Oil prices went down yesterday. VG was down 8%. Like, it is a back and forth stock pickers market, but it absolutely is choppy nonetheless.
Economy can process. If it's not, that's an entirely different picture in terms of what your expectations are economically. And part of the confusion has come from the messaging that we've seen from the administration on what their intent here is in terms of a long-term engagement with Iran. I want to play what Pete Hegseth, Secretary of War, said earlier this week in terms of expectations for how long this would last. Take a listen.
This is not Iraq. This is not endless. I was there for both. Our generation knows better, and so does this president. He called the last 20 years of nation-building wars dumb, and he's right. This is the opposite. This operation is a clear, devastating, decisive mission.
So the secretary is saying this is not endless. Then you see President Trump on social media saying this, talking about munitions. U.S. munition stockpiles have, at the medium and upper medium grade, never been higher or better. As was stated to me today, we have a virtually unlimited supply of those weapons. Wars can be fought forever and very successfully using just these supplies, which are better than other countries' finest arms.
So you've got the administration basically saying, hey, we have plenty to fight with and we don't have to be worried about our artillery or ammunition or our oil prices. But then this morning, you have the U.S. energy minister go on Fox News and say that no ship has accepted the U.S. Navy's offer to escort through the Strait of Hormuz. So you got a lot of other countries that are saying, okay, United States, we get how big, beautiful, and amazing you are, but we're a little scared of going through the Strait of Hormuz, and we're not necessarily sure if you escorting us through it is going to, and giving us your protection, which, you know, the United States should be able to guarantee that protection, is going to be the best idea. So it's a really dicey situation in terms of what's going on with oil. And my gut tells me that Trump is not going to be able to afford, literally and metaphorically, the ability for these countries, or not only for these countries to, you know, continue not pumping oil or having the production of it slow down, but he can't afford oil prices in general going up if affordability is the key voting issue going into the midterms. And so then again, that begs the question, right? What are the American people going to care about when you talk about Iranian freedom and liberation, and we have to make sure that everyone gets rights and democracy? It's like, okay, but my gas prices just went up by $2. You know, like it gets into conflict. And I think that conflict not only upsets the stock market, it could affect corporate earnings if people just start pulling back on their spend. And I think the market's trying to price it in. But the market has a hard time pricing that in because you keep getting good news around earnings, around AI. For example, Anthropic, we talked about it yesterday, $20 billion run rate, up from $14 billion 5 weeks ago. $14 billion to $20 billion, $6 billion in annual recurring revenue added to their business in 5 weeks. Well, what does OpenAI come out today and say? We are doing $25 billion in annual recurring revenue. Their valuation, again, at $840 billion. And that $25 billion is now more than Anthropic's $20 billion. Now, OpenAI, this is not any big secret, was always doing more than Anthropic in terms of revenue, but the gap is starting to close. And because the gap is starting to close, you got a lot of investors that are getting pretty excited that there's two big guys in the field that are fighting for this AI revolution, and both are growing like crazy. In fact, Sam Altman, he was at another conference today, we'll talk more about what he said. He said Codex, which is their competitor to Claude Code, essentially AI coding agent, has 2 million users and is growing 25% week over week. Not month over month, not year over year, not quarter over quarter, week over week. That means they're getting hundreds of thousands of new users every week paying for this product. And as a result of that, it doesn't seem like it's slowing down anytime soon. Look at Nvidia going green as we got 20 seconds to end out the day. We got Costco and Marvell. We'll talk about a bunch of different headlines that we had throughout the day. But the characterization we can once again give this market is that there is no trend. There is just chop. And either you embrace the chop or you don't. But one thing to understand is the volatility of the chop is not going anywhere. And today was another day of experiencing that chop. Thursday, March 5th, 4 p.m. Thank you, everybody, for being here. The stock market is once again closed. All right, we are done for the day. We are done for the day. We still have so much to talk about. Chris will be on in about 20, 25 minutes, and we will get into a lot of macro conversations with him as well. But let's get through some of these earnings, and we'll get through some more headlines. Speaking of headlines, we got one right now. Production at another oil field run by HKN Energy, an American company, stopped after a drone strike. Dude, I think I've seen at least 5 of these headlines throughout the morning. No wonder oil prices have been surging. And again, oil's up 8% on the day. It was down 7% yesterday. You know, so if you deleveraged out of your oil calls or your oil exposure and took some profits, you did it right before it was about to run up. And that's what's making this market a bit hard to, once again, trade in. But nonetheless, these are the headlines that I think we all have to deal with. VG right here, that ended up 9.86% on the day. Not too bad. SoFi ended, 3% on the day, 19.25. This one was below 19 literally an hour ago. Robinhood was almost below 75 2 hours ago, below 78 at one point, $80.56. Got that $80 close. Adobe, 280. That's nice, up 3%. Salesforce ended up 4.2% on the day. XLE, I think, was up about 0.5%. Yep, XLE, 56.49. That is the energy ETF. Coinbase, not a bad day after yesterday's day, although it was a bad day earlier in the day. And then things switched by the end of the day. Again, choppy markets, but nonetheless, markets that are trying to react to the headlines as soon as they come out. Even Tesla closes at 400 again, 2 days in a row, 405.55. And then you got AppLovin. I mean, I think we've been seeing a 3 handle on this basically for the past month. It just recently got a 4 handle. Today gets a 5 handle. Why? Because IGV is pumping. Microsoft had a great day. Software is up 2% on the day. AppLovin, a big part of IGV. And as a result, it is getting the benefit of the doubt. Intuit, I think that was up on the day as well. Yep, look, 6%. Intuit was at 430 in the morning, ended at 470. It was at 350 3 weeks ago. So I think the divergence here between semis and SaaS, and not just semis and SaaS, but the entire market, you can call it the S&P and SaaS, is happening. And, you know, we'll talk about some of the headlines that probably created more momentum coming into SaaS. But quite frankly, I think people just looked at these SaaS valuations over the past couple of days and said, you know what, it's time to throw a bottom in here. And hopefully this ends up becoming the bottom. CoreWeave ended up going down about 5.8% of the day. Nebius, this one was down 2%. Wix had a great earnings 2 days ago. That stock was up another 10.93% of the day. I think there was some news that they're going to accelerate their buybacks as well, which is helping the stock get some more momentum. Mercado Libre, that was up 0.5% on the day. You had Palo Alto, that was up 2.9. How about CrowdStrike? Did that get some love? CrowdStrike did get some love. Look at that. CrowdStrike was stuck at 370 for the past 2 weeks. It kind of got above 398 on earnings. Now it's at 426. So buying the dip in software has paid off. And if you did buy the dip, congratulations, as that is now paying dividends. Costco earnings, we are going to get after the bell. Costco was actually down 4% on the day, or 2.4% on the day. And the other one is Marvell, which is down 3% on the day, like the semis. Not the best day to report for the semis, but we're going to see what numbers Marvell puts up, and then we'll see what Costco puts up as well. Yeah, Credo was up 12% on the day. I mean, Credo was down 15% 2 days ago. Like, so many names just going the opposite direction from the direction that they were the other day. In fact, I'm looking at the option flow right now. Someone bought $24 million of calls on the S&P 500 right before the close. 24 million of calls versus 1.75 millions of puts right into the close. So you got a lot more people that ended up being pretty bullish. The number 5 top stocks that were traded in the options market today. Let's pull this up as well. You had Nvidia, Tesla. Wow, SoFi in the top 5. I don't think I've seen that in a while. Usually SoFi's got to have earnings to make the top 5. 815,000 contracts right there. Nvidia, Tesla, SoFi, Amazon, Broadcom, your top 5. Then you Apple, Microsoft, MicroStrategy, Netflix, AMD, Hertz Global. Not sure why that one got in there. Maybe there's a headline there. Meta, Trade Desk, again, $148 million purchase by an insider. I've never seen something like that. Micron, Google, American Airlines, Oracle, Baba, and then Robinhood as well, which is what you've got. All right, so you've got more of these chip headlines coming out right now. U.S. considers rules that would create 4 tiers for countries seeking U.S. chips. This is the same headline for why Nvidia got hit earlier in the day. And again, it was a bit weird of a headline, but if this is all the administration wants to do, create some type of 4-tier process to be able to figure out how chips are going to be distributed across the world, then sure, that's fine. I don't think that's bearish by any sense of the imagination. It is kind of weird that they're like forcing Nvidia and AMD to go through these hurdles, but that was the headline that messed it up in the middle of the day, and now that's what we have here as well. Again, we were waiting for Marvell and Costco. We have a bunch of different headlines throughout the day that we'll go through as well. but the Nvidia headline was the main one. And this Anthropic stuff is getting kind of crazy. So the Pentagon today has told Anthropic it is now considered a supply chain risk. A U.S. official confirmed this. It's a bit weird because last night, Anthropic was rumored to still have conversations with the Department of War. So I don't really know who to believe because you've got all these rumors saying Anthropic is still talking with the Department of War and they're going to be able to come to a compromise. Maybe all those rumors are BS, but maybe those are real. But then you have a U.S. official coming out today saying, hey, the U.S. has already clarified Anthropic as a supply chain risk, which maybe the U.S. is, or maybe the government is doing to be able to negotiate with Anthropic to, like, you know, show them how much it hurts to be classified as a supply chain risk. But you got a lot of conflicting narratives going back and forth, and that's also affecting Anthropic stock or Anthropic's public or private valuation as well. Marvell, that's up 7%. Marvell's up 7%. Let's see what the earnings are on Marvell. That's green. EPS 80 cents versus 79 cents expected. That's a beat. Revenue 2.2 versus 2.21. That's a beat. Outlook for Q1, Street wanted 2.26. They're coming in at 2.4. Marvell gets a triple beat. A triple beat. EPS, revenue, and guidance are all beats for Marvell. This is a company that's known to beat on at least a couple of metrics. The stock has not done that well over the past couple of earnings, specifically on earnings. And in fact, many times it's gone green and then gone red very quickly. So let's see if we can hold this momentum. 3.5% right there, $65 billion company. But you have two beats. They're not really impressive beats. They're, you know, less than 1% beats, but they are beats. Guidance is a bit more impressive, 2.4 billion versus 2.26. I mean, it was already down 3% of the day, so maybe it doesn't need to get hit that bad after hours. But you got Marvell right there, 3%. I think Costco ends up reporting at around 420, so we have some time for Costco. It was down 2% of the day, but Marvell right there, that is up 4.3%. Anthropic feels like a DeepSeek 2.0 moment. Yeah, I agree. It is very interesting in terms of not only has Anthropic been involved in all the pain that has happened in the SaaS companies, which hopefully is reversing, but again, they're going back and forth with the Department of War. Also, Dario yesterday, CEO of Anthropic, basically put out a memo internally, which got leaked. And, well, this is what he said. The real reason the Department of War and the Trump admin do not like us is that we haven't donated to Trump while OpenAI has. We haven't given dictator-style praise to Trump while Sam Altman has. We have supported AI regulation, which is against their agenda. We've told them the truth about a number of AI policy issues like job displacement, which obviously no administration wants to hear that thousands of jobs are going to be replaced. And we've actually held our red lines with integrity rather than colluding with them to produce safety theater for the benefit of employees. I mean, talk about someone who is letting loose and is just completely, you know, that's why when I hear the headlines of, oh, they're negotiating, I'm like, well, when you put out a memo like that, it doesn't really sound like you're negotiating. It sounds like you are holding the line in terms of how you think about this administration. And to Dario's point, this is another thing that was released today by Anthropic. They launched an AI exposure index to track which white-collar jobs look most vulnerable to LLM automation and whether the labor market is starting to show stress. So they're literally launching a website that is going to show you how many jobs are going to be essentially eliminated due to AI. And they said the number one job that is going to be the most exposed to AI risk is computer programmers. The administration does not want to see the leading AI company of our times put out content that's telling everybody they're going to lose their jobs, right? Like that's not something that as any governmental administration you would want to embrace. And so you also have a lot of political reporting and information reporting coming out last night that said a lot of investors in Anthropic are super pissed because they're like, bro, we just invested at 380 billion. Like, are you like, what is wrong with you? Like, okay, you don't want to work with them, but you're putting out way too much stuff. And like, maybe you can work with them in different areas. And can you guys come to an agreement? Nothing has happened yet. But I really do wonder what it means for the valuation of Anthropic, what it means for OpenAI as they continue to get more government contracts, and ultimately what it means for compute as both these companies continue to buy more. Marvell right there getting a real pump, 5.5%. It did touch 81. Now it's 79. Let's see if that can continue to get some momentum. I don't have Costco earnings. No, I do. Costco EPS 455. That's up 13%. That's in line. Revenue 69.3 billion. That's up 8%. That is also in line. Marvell now really catching a bid. Sales 7.1% versus 6.5 expected, and membership fees come in line. So no beats on Costco. The stock is literally flat after hours, like it tends to be, but no signs of slowing down in terms of the consumer as Costco is flat. Marvell right there up 6.4% on the day. AI programmers are automating away their own jobs. I mean, that's basically what Dario has been claiming is what's happening in this whole AI sphere as more and more models get advanced. And, you know, he quite frankly said that OpenAI doesn't want to tell the truth about it, but he's going to tell the administration the truth. I really do wonder how this battle plays out. This administration is still going to be in power for the next 3 years. And so if they are in power and they dictate policy, by the way, the other thing about oil prices going up, as I was reading one of the studies for the chart that I showed you, is that the One Big Beautiful Bill, a lot of the remedies of the One Big Beautiful Bill in terms of people getting tax refunds and essentially just having more stimulus to be able to spend, if oil gets to a certain level, and I think the exact level is 92 a barrel, which is still a long way from 80, but I mean, who would have thought we would be at 80 this quick? That starts to mitigate the entire impact of the One Big Beautiful Bill when they did a sort of statistical analysis of like the average increase you would get in terms of stimulus, like refunds, et cetera, price decreases versus the inflation that would happen from oil prices going up, just in general things, airplane costs, food costs, et cetera. So, I mean, Trump really cannot mitigate the impact of that big, beautiful bill, which means oil prices probably have to slow down. Marvell getting a nice pump, 8%. It looks like the market cares about it. Looks like the market's actually liking it right here. 8.06%. Again, they do have a triple beat, which is really good. And the stock seems to like it. Let me know in the chat if you are in Marvell or not, or you're in Costco. Costco, again, did report in line against all expectations. That's why the stock is flat. Marvell beat against all three of the expectations. By the way, Lisa McClain, another politician, we've been following what she's been buying. Her biggest buys have been Big Bear AI. She bought another $65,000 of Big Bear AI last month. So she continues to purchase more Big Bear AI for those that care about that stock. They had a relatively okay earnings. Stock didn't react that well, but Big Bear AI, she continued to buy more. Is Costco announcing a split? I don't think so. If they did, quite frankly, I think the stock would be up a little bit more, but we are not seeing that yet. IoT, they had earnings as well. That's true. Gap and Rumble, we're still waiting for those. Let me check IoT. That stock is up 11%. This is also another SaaS name, if I'm not wrong. IoT should be a SaaS name. Yes, they beat, wow, EPS by 40%, 18 versus 13 expected. EPS is up 65% year over year. Revenue, they beat by 5%, 444 million versus 422. Revenue's up 28% year over year. That stock is up 9.12%. 9.12%. Amid, any idea how long oil has to stay in these elevated levels to cause significant inflation? I didn't get through reading the entirety of the report that I was referencing. The only thing I got to was the price target, which was around 92 a barrel. I'm sure they probably talked about the time frame. I just haven't seen that. But I mean, the funny thing is the average price of oil or gas in this country went from $3 a gallon to $3.11 at the pump within 2 days of the war breaking out. So I don't know if we have to stay there for a month to see the impact or a day, but the point is getting up there. I don't think Trump would want to see. And right now we are on that trajectory, at least with the price action today. Maybe tomorrow changes given how volatile oil has been. I don't have Rumble yet, but again, IoT, congrats if you're in it. That's up 10.7%. Great day for a SaaS company to report because SaaS absolutely won. And put in the chat if you picked a SaaS name. I think I asked this question 2 mornings ago. What is your kind of SaaS name of choice? And I mean, it was a good mix between Adobe, Salesforce, and ServiceNow for a lot of people. ServiceNow, great day, 120. This thing was basically a 95 to 102 for the past 3 weeks. SaaS finally getting some love, which was even Zeta. Yep, Zeta broke 19. Okay, closed right below 19, but it broke 1940. I remember I got that notification. I was like, wow. And again, I wasn't really looking at the market, so I didn't really know why Zeta was up today, but now it makes sense. All the SaaS names pumping at the same time. Zeta right there, 1891. AppLovin absolutely did incredible, 508. That's back above 500. Oh, where's Figma? That's got to be above 30. Figma, $30.30. I'll take it. Hit 32 today. That's up 2.23%. You had Microsoft that probably broke 402, 410 today, up 1.35%. It was good. It was good for the SaaS name. Shopify probably 130. Yep, 134.79 on Shopify. Shopify was at 107 after going to 145 in 1 day 3 weeks ago on their earnings. That is how volatile SaaS has been. And now it looks like it's getting some respect. Shopify right there. That's up 4%. Rumble earnings, we got it. Rumble is down 3%. Revenue, 27 million. That's down 10% year over year. They hit 52 million monthly active users. They have $100 million in revenue for the year as of 2025. Market cap is 2.4 billion. And MAUs are up 11% quarter over quarter. They are not profitable. Average revenue per user is 46 cents. I really don't know anyone who watches Rumble or watches anything on Rumble. I'm just going to be honest. They also have 210 Bitcoin in their cash reserves. Like, I don't even know if this company is public. I really don't get it. But they lost $32 million last quarter as well. But there you go. You got Rumble. That's down about 3%. Gap is down 8%. What did Gap say? They are obviously gapping down right now. Something with Gap. This is more based on the consumer. We'll try to get those results. That stock falling 8%. That's actually going the opposite to a lot of the other names that were in the clothing space that weren't too bad. Marvell still going. Gap missed by 2% on EPS, 45 cents versus 46 cents expected. Revenue is barely a miss, 4.23 versus 4.24. Revenue is up 2% year over year. EPS is down 17% year over year. I guess a double miss is what's causing this gap down 10% right there on Gap. That was also down 2% during the day. Oh, yes, I forgot Fresh and Fit is also on Rumble. Yes, I mean, yeah, you got, yes, Nick Fuentes. Okay, so you got that part of the internet that is probably keeping Rumble alive. That is fair. That is fair. All right, so those are most of the earnings. You got Rumble down 5. You got Gap down 10. Again, Costco, they came in line with all expectations. Costco is flat. I mean, nothing too crazy. Marvell being the big winner on the day. That is up 9.3%. Marvell liking it, even though the semis took a bit of a hit today. Software was really where we saw a lot of action. Marvell, that is up 10%. Again, for all the people asking, where was I on the market open? We had to do an interview for Basis Points. That episode will come out tomorrow. I think people will enjoy it. But it was at 8 a.m. It was early in the day. So unfortunately, I had to miss the show. But we are back. And we'll be back with the market open tomorrow as well. All right, before we bring on Chris for Macro Thursday, I want to run through a couple of quick headlines that we saw throughout the day that I think are pretty important. Again, just so many different things happened literally over the past 24 hours. And it's interesting to see a lot of different sectors have different momentum. So a couple of different charts I want to show. First of all, obviously retail is piling into software, but not only are they piling into software, they are, you guessed it, piling into energy. Retail investors are now increasing net buying of the U.S. energy sector ETF, XLE, by 427%. In the first 30 minutes on Monday, retail net turnover exceeded $4 million. Remember, XLE does not really get a lot of inflows from retail. It gets it from the institutions. Retail tends to trade tech and other stuff, marking a 300% surge from Friday and 700% since Wednesday. Now, maybe this is going to work out because this war is going to continue and the price of oil is going to go up and retail is going to be able to benefit off this, potentially even use it as a hedge. But if this war not only ends soon, but if Trump continues to put in these like Trump puts on ensuring the vessels and the tankers to make sure that oil prices don't go up and escorting all these countries through the Strait of Hormuz, then oil prices might be a bit more stable. But it is quite interesting to see that retail called the bottom. If they called the, I mean, like, well, let's give it a couple weeks if this is the bottom. But basically, over the past week, retail has been buying software heavily. And so far, at least as of today, you are seeing that bottom potentially legitimately be called. Maybe that's going to happen on XLE, not in terms of the bottom, but more so in terms of the momentum that retail is buying into. But it also shows you how non-monolithic retail is. It's not just tech. It's also other different sectors of the market that are coming in, whether it's software or whether it's energy. Then take a look at this headline in the AI space. H100s, we looked at this chart about, I think, a month ago, that the H100 rental prices, which is NVIDIA's legacy GPUs, were reaching new levels. Now those levels are at the highest levels, not since December, which is what we saw in January, but now since April of 2025. Which, what does that signal? That signals that what Jensen was saying on the earnings is coming true. Compute demand is massive. It is not slowing down. If NVIDIA's oldest chips are getting this type of demand, then obviously you're going to likely see more momentum. In fact, speaking of Jensen, I want to pull up this clip right here. This is about a minute of Jensen talking. I was listening to this while walking yesterday, and I literally had to sit down and type out what Jensen said. If you didn't see or hear his quote, I think it's really important. We're going to watch Tanner react to this because he streamed this, but Mr. Jensen Huang really does care about NVIDIA stock.
How do you think about that? Well, of course I care about the stock. I care about shareholders. I care about our employees. I care about all of you. And you might be referring to, we just had the best earnings in the history of earnings. Is that what you were saying? I think somebody actually told me that this might be the single best print in the history of humanity. And I said it must be only recorded humanity. I'm sure somebody had better returns. But anyways, we had a very good quarter. Listen, you can't hold the stock back. You can't hold it back.
Dude, as soon as he said that, I'm walking down the street, I'm hearing that, I had to stop. I literally had to stop and sit down near a bench. And I was like, oh, Jensen's mad. Jensen's mad. He doesn't really talk about the stock that explicitly. Not a lot of CEOs do, right? Because it's kind of taboo. You're not supposed to reference the stock. And now he's like, no, guys, you don't get it. You cannot stop us from winning. We are going to win. Whether you want to do it now or later, you can pick, but you're not going to stop us. And in the following 30 seconds, he's going to explain why you can't stop us.
And the reason for that is very simple. Compute equals revenues for companies. In the future, every single company will need compute for revenues. I'll just make that prediction for now. Every single company will need compute for revenues. And the reason for that is because compute translates to intelligence, which translates to your digital workforce, which translates to your revenues. I'm certain compute equals revenues. I'm certain also that compute equals GDP. Therefore, every country will have it, because not one country in the future will say, guess what? We're going to opt out on intelligence. I don't know what we got, but we don't need intelligence. That's the one thing we don't need. Okay? And so if you need intelligence, you're going to need digital, you're going to need AI, you're going to need compute. And so compute equals GDP. I know that for certain. I also know that we're at the beginning of this journey. And I see crystal clearly exactly how it's going to get funded. We know for a fact that all the CSPs took all of their capex and they converted to generative agentic systems, AI systems, because it helps search, because it helps shopping, because it helps ads, because it helps social, because it helps literally every single internet service in the world has been reinvented into generative AI. So they could take 100%, the entire internet industry could take 100% of their capex and make it AI because it's better. We've proven it to be better. Meta has proven to be better. Google has proven to be better. AWS has proven to be better. And so you could now take your capex and convert to this. Number two, I just said, the entire software industry will be token driven. The entire software industry. You pick your favorite software company and I can show you exactly how they're going to be token driven. And that token, you take your favorite, software company, their token will be either produced by themselves, which needs compute, or they could be resold from Anthropic or OpenAI, and that needs compute. And so what that says for the first time is the entire IT industry will have to be fueled by compute. That's exactly where all this is going to come from. Trillions of dollars of it. And
I thought this was just an incredible explanation. This was the first time outside of the earnings that, because on the earnings, Jensen probably can't say you guys can't hold the stock back. That would probably be inappropriate on an earnings call to say. But in a more informal conference like this, I think he kind of laid out the logical syllogism here even more clearly, which is if we think exponential growth in revenues, which is this whole thesis around AI, productivity, efficiency, GDP growth, like none of this happens unless this AI thing is real. And so Jensen's argument is you're already seeing the operating cash flows for all these companies go up. Meta's been the best example of this. In order for those operating cash flows to continue going up, they're going to have to keep spending on compute. Now, the bear case as well, they're going to eventually slow down on the capex and they're still going to be able to stabilize their revenue growth, yada, yada. But Jensen's argument is no, countries, companies, every hyperscaler, every new startup, everything that is going to need some level of exponential revenue growth to show the productivity and AI gains that lead to this massive GDP boost that we all think is going to transform humanity, society, and bring in all this age of abundance and wealth that Elon is talking about. It needs more compute. You either believe that or you don't at this point if you're an Nvidia investor. And quite frankly, if you're an investor in the S&P 500, you kind of have to buy into that thesis. Because if you don't buy into that thesis, I don't know how the broader market continues to go higher if this thesis ends up falling apart. And maybe the hyperscalers can survive if the thesis ends up falling apart, but they're probably not going to grow at 40, 50% if there's not this massive tailwind. That massive tailwind requires compute. So I thought it was a good moment for Jensen to just be like, I know the company's worth $4.5 trillion. I understand that it's already big and a lot of you guys already own it, but you guys should probably own more of it because we're only going to get more and more valuable. And it is not easy to discount this. And I thought he had a good moment yesterday, kind of making the argument for everybody. All right, 3 more headlines real quick, and then we'll get into Macro Thursday. I'm seeing one come across the screen right now. United States is considering invoking the Defense Production Act, wow, to accelerate offshore drilling by Sable Offshore Corp in California by overriding state permitting barriers as per Bloomberg. Once again, I feel like we've been talking about it for 3 days straight. Trump is going to do everything he can to make sure that oil does not go higher. The Defense Production Act to accelerate offshore drilling and overriding California state permitting barriers to keep pumping oil. Where's oil prices right now on this? Drill, baby, drill, right? Slightly flat after hours. Nothing too crazy in the futures. I think this is going to be a big, big story over the coming weeks. You're going to want to see more and more of these actions by Trump. And quite frankly, it's a little bit, hey, is it actually going to happen, right? Is that actually going to happen? Or, is Trump going to try to end the war in a way before he has to go that far to be able to make it happen? All right, last 2 headlines. This one I thought was really interesting as well. We've been talking a lot about South Korea. Active stock trading accounts in South Korea rose to a record 102 million. The number of accounts doubled over the last 5 years. In February alone, when the Kospi went up 30%, which is their version of the S&P, 1.5 million new accounts were opened. Margin loan balances are up a record 21.8 billion in South Korea. So when I said the South Koreans love their leverage, you give them a stock market, their own index. Imagine if the S&P was up 50% in 2 months, right? Like the amount of leverage and the amount of volume of trading activity, the amount of new accounts. Robinhood would be like $700 a share if that happened. Like, this is what we're seeing happen in South Korea. I don't know if it's going to result in a blow off top because EWI was down 5% on the day, but the South Koreans are getting more active in the market, and that's likely going to create more volatility in the U.S. markets because, again, they trade a lot of U.S. stocks. And then finally, last thing, I think we got to cover this because how do we not cover this? This went absolutely viral over the past 24 hours. Someone called out Chamath about losing money on SPACs for retail. And Chamath says, bullshit. Someone responds, it's not bullshit. I invested in all of them. Your pitches were compelling. Then I lost tons. You made tons. Why? Again, Chamath made a lot on the fees as the sponsor of those SPACs. And then Chamath says, and I couldn't believe, I was with Roy last night. I was like, Roy, can you believe and me and Roy were just like, did he actually say, like, we were at the Robinhood event when this was tweeted. We were like, did he actually say this? Then you generated capital losses. Did you use those yet? And I thought the guy's response was one of the best responses I've ever seen. He says, respectfully, what kind of fucking answer is that? It's like beating the crap out of someone only to ask how you liking that health insurance, huh? Like, if you're in the stock market and you lived through that SPAC era, or if you even, know a little bit about what happened during that time, it was an ugly era. That's why when people say we're in a bubble right now, like, we were not in the 2021 type of bubble. We might be in a bubble, but it wasn't 2021 like type of bubble because that was crazy. You had people making hundreds of millions of dollars pitching these garbage companies to retail in the form of SPACs. And then instead of just accepting your losses and being like, you know what, I got it wrong. I'm sorry. I made a mistake. Ultimately, everyone has to be accountable for their decisions. If you lost money on it, you lost money. I didn't lose your money. You might have been convinced because of my pitch to lose money, but I did not lose your money. But I do apologize for having a bad pitch. Instead, Chamath says, well, actually, I generated you some capital losses that you can use to offset your capital gains, which means, quite frankly, there's a silver lining to the losses that you took. And so Chamath is getting dragged over the past 24 hours. In fact, people keep responding to him, and now Chamath's like, post your tax return, prove to me that you actually lost this money. Yada. He's just digging himself in a bigger grave right here. Sometimes, no matter how rich you are, you just got to accept that you messed up. You made a mistake. I'll probably make a lot of mistakes, and apologizing is easier than trying to prove that you are the smartest person in the world, which is this capital losses comment. I don't know if it was trying to be funny. If it was trying to be funny, it didn't come off as funny. It came off as being a total dick. But that's what we have with Chamath. All right. Let's get into Macro Tuesday. We got a lot to talk about. Software, oil, the war. So much is going on in the world. Ladies and gentlemen, Mr. Chris Patel.
What's going on, man? How are you?
How are you, man? How have you been?
First of all, I think you're wrong. I don't think Chamath made a mistake. I think he willfully, knowingly suckered a bunch of people into a lot of these SPACs and basically used them as exit liquidity. He was very eloquent with how he worded things. And, you know, at the same time, remember, he was the chairman for a lot of these companies. So on one hand, he's saying this is the future. On the other hand, he was selling out from under them. So, you know, whenever you see someone saying one thing and doing another, I mean, look at ServiceNow, right? Bill McDermott is saying, look, I think we're oversold. What does he do? He buys his own shares, right? The guy from TTD, he says, look, what am I going to do? I'm going to buy my own shares. So did Chamath ever buy into any of the bullshit companies that he was selling, even at a discounted price?
No, he sold.
Right?
Even he at one point they owned almost like 20% of SoFi and like 40% of Virgin Galactic, and those were gone by 2022.
Yeah, so it just goes to show the guy is willfully, and that's the difference between someone who has a real thesis behind their idea and they have conviction and they're willing to go down with the ship, or they're just there to use you as exit liquidity. And that's essentially what he did. You know, so I think he's going to go down as one of the, even if he is rich, I feel like he's going to get cancer. I feel like God is going to put that in him. Like at one point, they're just going to put some fucking, I'm a big believer in karma. And I think eventually the karma is going to get him. I don't know how it's going to get him, but it's going to get him because he's hurt a lot of people. It's one thing if you're,
also, The thing is, when you've heard him on podcasts, he's actually a really humble, nice guy. When you like really listen to him and talk and like he's a normal person. But then online, when all these people start calling him out, instead of just taking it like a man and being like, yeah, I messed up. You can keep talking about SPACs till,
bro,
2075. I messed up. And he goes defensive. And
what's the opposite of giving blessings? Like, you know, like in Hindu culture, we give blessings. What's the opposite of that? Like giving the people a curse, you know, like it's like a lot of.
It's not just Indian, it's the evil eye. There's a lot of cultures that believe in that.
Yeah. Like there's a word in Gujarati. It's called, well, I don't know if it's Gujarati, it's Hindi, shrap. You ever heard of that? It's like where basically someone curses you, you know? So there's a lot more people that are cursing the dude. I mean, I'm pretty sure I'm going to get something on my end with all the Palantir hate that I'm getting, you know? I'm sure that there's people like, there's probably a voodoo doll of Chris somewhere like, fuck this dude. And I'm like, oh, my back.
Okay, that would be kind of funny. But the difference is you've accepted and you're like, yeah, I messed up. I got that one wrong. And it's not that big of a deal. And if someone still wants to troll you after that, it's whatever. For him to say, I generated you capital losses it's like spitting in your face. And it's not rage baiting. Like rage, that's giving it too much of a nice interpretation. It's legit him being like, I don't care about anything. And I don't care about what I did to you 4 years ago. And I'm not going to even say sorry about it. And I think that's why it pisses off so many people.
Yeah. Bro,
let's get into. Go ahead.
I was gonna say, bro, I need my wife back. She's in California this week, and I'm running out of dishes. I could just do the dishes, but I haven't done the dishes in like 2.5 years, and the pile has gotten big, and I've resorted to using paper plates.
Look, I know you bring in a lot of money for the family, but you need to learn how to do some dishes, bro. That's crazy.
Whoa! When I came to your place, the dishes weren't exactly clean, brother.
I had 10 people over. Okay, it was a little different. I did the dishes when you guys left. Actually, Michelle did the dishes, but voluntarily, I was streaming Pound to Earnings. I didn't know she was doing the dishes, but anyway. Okay, there's a lot of places to take this. You had a lot of thoughts on Robinhood as well. Let's leave that for the end. We'll talk about Robinhood. I'll talk about my thoughts as well. Let's start off with SaaS. That's the first big talk. Actually, no, let's do SaaS, then we'll do oil. Okay, so you're in Adobe. I think you recently bought Microsoft yesterday. SaaS had a great day. IGV's up, I think, 13% over the past week. Simple question. Has SaaS bottomed?
I think so. I think when Claude first came out, the Claude bot thing, I think a lot of people got really, really bullish on like software being disrupted. And, you know, I think there's a certain level, some softwares are definitely going to take a hit, but I think the market overdid it, right? And as now the talk is kind of died down a little bit, people are realizing that, wait a second, there's actually some value here that people are not taking into consideration. And even some of the more likely to be disrupted by AI, like especially with how these companies charge. Some of them charge based on seating. A lot of them are kind of transitioning to hybrid models where, like Jensen said, there's going to be more tokenization. So it's almost like, hey, you're going to get a certain level of subscription to do X, Y, and Z. But if you want to do more and you want to get more insights into your own data, then you're going to pay, via a usage thing. So you're going to, so we're transferring.
Do you think in the past 48 hours, that narrative that you just outlined by Jensen, like some hedge fund manager woke up and called all his buddies and was like, oh shit, like Jensen's right, we got to buy software? Or do you think this is more of a technical retail leveraging event? Like why do you think the stocks are pumping the way that they are in the past 5 days?
I think the news just finally died. The news just finally died down. I felt like for a solid month, every day, people were just talking about Claudebot. It's like Claudebot did this, Claudebot did that, and Claudebot did this. And it just caused a lot of algos to come into the market, a lot of fear and panic, and everyone just got really, really crazy with it. And so now that the news has kind of died down and then people are waking up from that short blip and they're like, wait a second, you mean Microsoft, like Windows is not going to be replaced by Claudebot? Make me Microsoft Windows copy. You know what I mean? Like that's just dumb when people do that. But that's how it is. The market sometimes is a little bit too short term in their thinking and their approach. And so you get these conditions where things get very oversold relative to the value. And could there be some destruction on margin in the future and maybe some growth in the future? Probably, but it's not enough to take away from the significant cash flows that these businesses generate and they're able to deploy into the market. And so I think retail definitely was a lot of buying for sure, but I think there was also a lot of fund managers that were buying as well. So, I think from both ends of the to the buying side, it was coming in. And so some of the names that were oversold, and I think they're still like, we're in the very, very early innings of a SaaS recovery, but I would not go crazy and be like, yeah, I think Adobe's going to get back to like a 35 enterprise multiple. Like Adobe's definitely one of the best companies to buy into. I mean, it was a great company to buy into, and I think there's still a lot of value ahead of it. But yeah, I think, and Adobe, you really have to look at each company individually, unfortunately. So yeah, Adobe's going to do well. I think ServiceNow is going to do okay.
What's the probability of a dead cat bounce in software and this not being a bottom? Do you think it's like 0, or do you think it's 5%, 10%?
I think in my opinion, I think it's 0, only because I'm looking at this and saying, what existential threat is out there to replace the current SaaS like incumbents, right? Like these Claude bots and all these other things, they don't have the same things that like an enterprise grade software has. So even if someone was able to create a very generic copy, the amount of time that would take, the amount of cost that would take to switch over is just immense. So I think the market got ahead of itself and, just basically said, fuck it, I don't want to be in this sector anymore. And so there was just a lot of overselling, a lot of panic selling. So I don't think that there's any existential threat from AI. If anything, there's probably some companies that will benefit from AI significantly because they'll be able to integrate AI into the software itself and then go from a pure subscription-based 10% per year organic growth model to, hey, I think we can do 5% organic growth on a seat-based pricing model, but then also have consumption-based what is that thing called? Pricing as well. So, I think, like I said, I think we're moving more towards a hybrid model than a disruptive model. So,
yeah, and maybe people are more occupied about the war, and software is not a hedge against the war, but it's oversold enough where people want to get out of stuff that's very. I mean, that's the narrative, right? Super high beta in times of trouble might not do the best, but something that's super oversold, like all the software names, like freaking Microsoft, is at least somewhere to park your money in places in times of volatility, even though the narrative is very volatile on like an AppLovin. But that doesn't mean AppLovin technically deserves to be at these levels. What do you think about Trade Desk and that 150? Like, are you even considering buying a little bit of TTD when an insider buys 150 million of his own stock?
I don't have enough knowledge in the sector to be able to make that guess, so I don't know. The one thing
But
I
even,
can
even
do is,
the insider buy itself, is that at all like, that's compelling?
no,
I don't
that's
think we've
very
seen it.
bullish. That's very bullish. I mean, I think someone on Twitter put it that the guy sold at like 125 and is now buying it at 70% discount. So, you know, like I said, I haven't done enough research in TTD to be able to make a determination whether or not I want to be in it. But, you know, like I said, my money is tied up in other things that are just, in my opinion, very, very oversold and have much more of a easier time for me to understand the business model and get behind it. So,
okay, let's transition to oil, because I think that's also really interesting. So last week you were on, I think we both were of the mind, well, that was before the war broke out, but we were both of the mindset that, you know, the spike in oil is obviously pricing in the war. Then the major escalation happened 2 days later, and now we're just going higher. Do you think the administration understands how important it is to get oil prices down, or do you think they don't have control anymore if these refineries keep getting shut down?
no, I mean, they definitely understand what the value of energy prices and keeping them low is for this current like inflation, you know, what's the word? Inflation
Reacceleration.
I don't even know. Yeah, like basically they need inflation back down again, and energy is one of the leading leaders that's been getting them down. So the question is, how are they going to get energy prices to come down now? So one of the things is energy is all about confidence, to be honest with you. You know, yes, there's a supply and demand element to it where you see supplies coming off in the Middle East, and so people are, you know, questioning. But one of the reasons why you're seeing the rise in oil prices so fast is because people are bidding up future contracts, because the uncertainty around future contracts is in limbo, right? Like no one knows when this war is going to end. It could end next week. It could end next month. It could end up next 6 months from now. But if you're a company or you're a country that needs to basically have a secure, steady flow of energy coming into your economy, then what you're going to do is you're going to bid up supplies ahead of time, right? Because you don't want to be in a position where you need 10 million barrels of oil and now all of a sudden you got to go into the open market and buy them at $150 a barrel because the war dragged on longer than you thought it would. So I think what we're seeing a lot of right now, which is the sudden rise, is not necessarily a supply and demand driven what is it called? A supply and demand driven move. It's more driven by expectations. So one of the things
do you think we keep pumping?
What happened?
Or do you think it's possible we keep pumping? Or do you think it's,
I mean, it depends. It depends on the news, you know. Like one of the challenges with commodity prices is that everything is news and narrative driven. So right now, if let's say Iran comes in tomorrow and says, fuck it, we surrender. We'll denuclearize and we won't build any more missiles, and we'll agree to, you know, some sort of UN negotiated, you know, observing task force to make sure that we're not going nuclear again, and we'll even do democratic elections, right? Automatically oil prices would basically come down because everyone who has a futures contract would end up selling it in the open market. And now oil prices are back down to $60 again, right? Now, on the other hand, let's say the Iranians say, fuck it, no, we're going to fight you to the death and we're going to fight you to the last man. And we're going to keep attacking ships on the Strait of Hormuz. Now, all of a sudden, you know, you're going to drag this now all longer. So they understand this. And so one of the things that they're using as a leverage point against the United States, that they know that Trump at the end of the day is a democratically elected president who has an economy to manage. So if they can't hit us militarily, they will hit us economically. And so a lot of the attacks that they've been doing, they've been focusing on areas where they know that they can put some harm, you know, economically on us, because that's the only leverage point that they really have. The question is, at what point does this all end? The Trump administration, in my opinion, has made a grave mistake in basically outlining that this is going to be a short kind of situation where they're going to resolve this in a month, right? When you do that, what you're essentially doing is giving the enemy a clue into what your pain tolerance is. You know, if you tell someone, hey, I think we're going to be done within a month, your thought is, I just need to survive a month, and then these guys are gonna, come to the negotiating table themselves. And so it really comes down to whoever comes first to the negotiating table has the
Well,
least leverage.
what if Trump's argument is we'll wipe them out so bad in a month that they will have no choice but to surrender? Do you think that's a real possibility?
Yeah, one of the unfortunate realities of war, brother, is that over time, public opinion tends to skew negatively as you start to see bodies and caskets come around. So, not to mention from an economic damage standpoint, if people start seeing $3 and $4 at the gas pump, that puts a lot of pressure on politicians to, make changes, even if it's military wise. So, this is one of those times where you have to, in a democracy, you would have to deal with the impacts of this. Now, on the other hand, if you had a president or king who never had to deal with the public pressure backlash of anything, they could continue this on for forever, and now the other side doesn't really have a leg to stand on. And so unfortunately, one of the challenges when you're conducting war in the modern era is that everything is very public and it's very very out in the open. So a lot of the impacts are going to be projected. And so adversaries, what they essentially do is they're just like, we just need to survive. And so that's what the Iranians are probably trying to do right now, to survive.
By the way, is this true? Because I've been hearing this all day on X. Are gas prices like going crazy in Europe right now?
I mean, I don't know. I mean, I think they were pretty high to begin with because they don't have a lot of oil themselves, with the exception of, I think, Norway.
That's what I'm saying. I imagine the Europeans are getting hit the worst at it. So if you're European, put in the chat, is it what is regular? And then what is
it was high even before this. Like
it was $10 a gallon before this.
They do it by liter, so you have to convert. But it probably is going up. Yeah.
Well, yeah, I mean, $23 a kilo. It's still, a lot of people are saying it's still up 40% in the past 2 days. I mean, technically it's up 30% in the US over the past couple of days as well. Across the entire world, it seems like you're seeing more and more pressure, which, to your point, right, in a democracy, if the public can vote you out, which we're going to see in the midterms, we'll see how Trump reacts to that. By the way, we got a couple clips of Trump before we continue. He is meeting with some soccer team from Miami. Here's some things he's saying about Iran right now.
Thank you very much. And yesterday, my administration announced decisive action to help keep down the oil prices, including offering political risk insurance for tankers transiting into the Gulf, as you know, pretty dangerous territory. Further action to reduce pressure on oil is imminent, and the oil seems to have pretty much stabilized. We had it very low, but I had to take this little detour, if it's okay with everybody. Scott, it's okay with you? Scott's the one who has to put up with it. He said, you have to do this now? I said, I have to do it, Scott, right? But it's been very strong, and everybody, including Scott, everybody feels we had really no choice. It was.
I don't think Scott feels they had no choice. I think Trump's making a joke, but there's a lot of the best jokes have some truth to it. And I think right there, Trump just implicitly told everybody that Besant was not a fan of doing all this, but he's going along with it. The entire administration has to go along with it. He's calling the war a detour. I mean, again, these are the things rhetorically. I wonder how the American people are really going to interpret this stuff as we head into the midterms.
They were going to hit us if we didn't hit them because they're crazy. And in the long term, the actions we're taking will dramatically increase the stability of the region and oil prices and stock markets and everything else. You know, we set the all-time record in history with the Dow going to 50,000.
Okay, this other clip right here on Iran as well.
I said, what's left? But they're tough and they want to fight. And they're calling, they're saying, how do we make a deal? I said, you're being a little bit late. And we want to fight now more than they do.
Chris, you think he's telling the truth about that? That they're calling, trying to negotiate, and he actually wants to fight? Or do you think Trump would settle in a real deal if they could get one?
I mean, it's all going to depend on how much pain Trump is willing to tolerate. It really always comes down to that. So Trump has proven that he's pragmatic enough to know what the end goal is. And I think right now the Israelis were really the ones that pushed into this, and the US said, fuck it, we can't really like stop the
And by the
Israelis
way,
from doing what they're gonna do.
Mike Johnson and Marco Rubio themselves admitted that,
Yeah.
So you're not
They're
just
just
theorizing.
like, yeah. It's either Israel goes it alone, in which case now it could be a bigger thing, or the US comes in behind Israel and takes the opportunity right now. And so I think Netanyahu probably noticed that Trump is probably going to end up in lame duck status by November. And so he better, if he is going to take, like interventionist actions against Iran, he better do it now while Trump has enough power to keep the U.S.'s support in all of this. So I think Israel looked at this and calculated from their end, saying, look, these guys are definitely going to go nuclear. Even if we stop them, it's only a matter of time before they get there. But the bigger threat in the short to medium term was just the stockpiling of ballistic missiles and drones and everything else that could hit Israel. Because you saw during the whole Hamas post-Gaza invasion thing, where Iran was actually shooting missiles into Israel, right? So one of the things is that Iran was stockpiling all of these weapons. So right now, by Israel going into Iran and trying to, take out the regime and everything else, what they're essentially trying to do is there's two objectives here. Number one, deteriorate any capacity for future rearmament by Iran as much as possible, so that this way they don't have to worry for the next 5, 10, whatever years until those stockpiles come back if the Ayatollahs remain in power. Or the other option is, and this is the option that would be better, is that they take out as many radicals as they can and they only leave the moderates alive, and the moderates end up negotiating sort of a truce-like situation. Like, you don't hear about you don't hear about too much of an issue coming from some of the other countries that have already been sort of pacified, if you want to call them that. Like, if you remember back in the day, like Libya used to, under Gaddafi, used to threaten people all the time. Libya doesn't threaten people anymore. They're too busy fighting themselves. Iraq with Saddam used to do that. Now they're too busy, dealing with their own stuff. So right now, the best course of action for Israel is to destabilize Iran enough to the point where there's no cohesive anti-Israeli posture that they can mount long term. Does that make sense? And you want to do it while you have an administration that is supportive of you. You don't want to do it with either a president like Obama or Biden, who are a lot more lax with Iran and willing to negotiate diplomatically certain concessions. So Trump is who he is. In my opinion, I think Trump made the right decision. I think that at the end of the day,
I was gonna ask you that as a American veteran. For those that don't know, Chris did serve. I think your opinion on this is really important. I think, we saw a viral clip of a veteran who was in Congress yesterday screaming that he doesn't want any more wars. I mean, your personal opinion, do you think if this turns into a war, was it the right decision to make?
In my opinion, yes. One of the reasons why was because Iran has always been a state sponsor of terror, but that state sponsor of terrorism has really gotten out of hand more so now than ever before, right? Like back in the day, I mean, I'll give you guys an example. If you go to 2003 when we invaded Iraq, right? Everyone thinks like, oh, these IEDs and everything. Where do you think all of them came from? A lot of them were irregular forces that were literally getting trained, and all the weapons and supplies and explosives, they're all being provided by Iran, right? A lot of the Shiite militias that basically were in Basra, dude, some of the heaviest losses people took in Iraq were actually in the southern region, especially among the British. It was all supported by Iran with a lot of the IRGC basically funding them. If you look at Hamas, Hezbollah, they get their funding from somewhere. They're getting them from Iran, right? So you've got one of the largest sponsors of terrorism in the world. Iran knows that they can never really compete against us one-to-one. So one of the things that they're going to do is irregular warfare. And so I think at some point we all need to come to an understanding that whoever is a state sponsor of terrorism needs to reevaluate their position. And if it means that, hey, if if we want to defeat Hamas, if we want to defeat Hezbollah, and by the way, both the organizations, I understand that there are certain subset of people that think that they are freedom fighters and they have their justification, blah, blah, blah. But after October 7th, I don't know if there's any justification by their methods, because they didn't just attack military targets, they attacked civilians. So, you know, freedom fighters, like real freedom fighters, like if you're, you know, rebel, you don't attack civilians. Yes, you want to go after military targets. Sure, that's I could at least somewhat get behind that. But when you start going after innocent people at a concert, that's where you drew the line between your freedom fighter and you're just a fucking terrorist. So so yeah, and I think if you think about it, Iran's kind of proven the point that they're willing to attack non-military targets, right? Which means that they are really a state sponsor of terrorism and they are a terrorist country. Well, at least the IRGC is that. So I think the best thing that could happen for us, for Israel, the Middle East in general, is for Iran to have a regime change, but not necessarily done by boots on the ground by either the Israelis or us. Let the people of Israel decide who they eventually want. I think that there should be democratically elected elections with people that are more moderate. And I think if that happens, then, you know, I think the world could be a much better place.
And I think there are going to be a lot of people that agree with you and a lot of people that fundamentally disagree. And those perspectives will be competing over the coming months, getting into the midterms, on essentially a referendum on everything that has been happening. So, you know, time will tell. But I think we're not going to stop talking about it as long as this war continues. And obviously Trump, as close as he thinks the timeline will be to end, it usually is going to take a lot longer. Marvell right there, by the way, guys, for those that are tracking it, 50% growth in data center revenue on the guide. And then you have 30% growth revenue for fiscal year 2027, 11 billion. That's why that stock is pumping 11% after hours. Speaking of Marvell and data center growth, Chris, you heard what Jensen had to say yesterday. I know you have Nvidia options. Do you think he's like telling the truth about the world needs more compute and you can't hold the stock back, or you think he's just talking to talk?
Long term, he's right, but short term, he's probably like exaggerating, you know? Like, I believe that the future economy is all going to be token based, but I think what happens is people in the market, they want instant gratification. You know, they're like, how come you guys are not growing 200% year over year? How come you're only growing 100% year over year? You know what I mean? That's where we are in the market today. That's why Nvidia for the last 7-8 months has been flat, because it's like, wait a second, what? How come you're not growing faster? You know, so it's fine. I do think that at some point,
did you feel the energy in his voice when he said you can't hold the stock back? Like, did that inspire you to be like, I bought some more videos? Dude, as I'm hearing that, I need to buy more. Like, did you feel that type of moment yesterday?
I did roll my 220 calls into 250 calls. So what I did was I have 220 short calls that before earnings, I took some, I moved them down. So I was able to at least hedge my position. But then what I ended up doing was just saying, you know what, I think that this thing could retrace up to the 200s again in a short order, in which case this thing could actually go up. So I ended up just buying back my 220 calls with some profit and just going further out with like 250 calls instead. But I do have a pretty good position in it.
But he convinced you to go up to 250 because, like,
I don't think he convinced me. I don't watch Jensen's every comment, everything. Like, that's something that Tanner does, because most of his net worth is in Nvidia, where he's literally glued to, you know, he's probably like smelling Jensen's farts everywhere he goes. But I'm like, nah, I'll go with, do I actually see demand? Do I actually see RPO growth? What is everyone else in the market saying? Like, what do the utilization trends look like? What do the valuation trends look like? How's the credit markets? Because at the end of the day, there could be a demand up the wazoo, but if the credit market doesn't agree with you and they're not willing to finance your data center construction, then really, what's the point? Because at the end of the day, Nvidia only makes money when they sell these GPUs to everyone, right? So that's how they generate their money. So if right now these companies run out of credit, which right now private equity is starting to face, you know, a little bit of challenge, even if there's unlimited demand, until you start to see that monetization happen among the hyperscalers, you might not see creditors get behind additional capex. Does that make sense? You know, like right now, if this year Microsoft, AWS, Google, they absolutely go crazy with their EBITDA growth, right? And they actually see positive ROI coming in from all of these capex investments, then the market, of course, is going to say, yeah, here you go. Here's some more money. Oh, you want to spend $280 billion next year? That's fine, as long as you keep growing. The day that the ROI makes no longer makes sense, then what ends up happening is the market retraces and says, hey, listen, in order to finance this, you know, build out, we're gonna charge you either a crazy amount, or we're just not going to finance you. In which case, now the hyperscalers have to decide whether they want to go into debt and load up their balance sheet, or whether they want to, you know, or they want to sell stock and basically lower future earnings, or if they just want to digest some of the build out that they have already. Does that make sense? Like, sort of,
Well,
the
it makes
market
a
is
lot
going to
of sense.
dictate. Yeah.
But at the same time, Jensen is envisioning a world where trillions per year will be spent on compute. And I think you don't agree with that.
No, I agree that there's going to be money spent on this compute. It's just a matter of how are you going to get the financing behind it? You know, everyone, it's okay. Here's the thing. I love pizza. Okay. But if I only have $5 in my wallet, I'm not going to go out there and buy 10 pizzas because I can't afford to buy 10 pizzas, right? Just because I like pizza doesn't mean that I can buy as many pizzas as I want. You know, I could get some credit card and they're going to say, okay, yeah, I'll lend you $50. You get 5 pizzas for that. That's what it is. So even if Jensen is right in that the demand is unlimited, unless the credit markets agree with you, and the only way that the credit markets are going to agree with you is that you actually show positive ROI over time. I happen to believe that there is ROI coming. The hyperscalers are not investing into a black hole, right? In which case, eventually people will say, wait a second, no, I think this build out is sustainable, you know? So when Amazon comes out and says, we're going to spend $200 billion and the stock dips, that's a clear indication that the market is saying, hey, we don't believe that you're actually going to get a tangible return from this. Now, on the other hand, if Amazon proves it out and you see RPO and Amazon grow exponentially, and you see like the earnings grow in Amazon, everyone's going to be like, oh, wait a second, here you go, Amazon. How much more do you need again? How much did you want to say you want to spend?
But isn't that what's kind of happening so far?
Yeah, that's exactly what's happening.
Okay, but so that's the thesis, right? If that's what's happening, the reacceleration of revenue, and Jensen says compute's needed for more revenue, like, I guess the broader argument around how the capex is going to be financed, if it's continuing to getting financed from cash from operations and debt because the growth is there, then it'll be there.
The initial build out was all financed from existing cash flows, right? So there was no question. Like, if Google wanted to spend their entire cash balance, they could do it. You know, no one's going to stop them. But when you start going into the debt markets, that's a whole different animal. You know what I mean? When you have to start borrowing money from someone else, like I said, I could buy all the pizzas I want if I'm buying them from my own cash pile. But if I'm going and borrowing money from someone, they're going to ask me, like, wait a second, like, how come you love this pizza so much? What's going on? Like, when am I going to get paid back? Am I going to get paid back? So that's what it really comes down to. I mean, that's why you're seeing the same thing happen with Oracle, right? Oracle.
Well, I was just about to bring up Oracle. Looks like they're planning to fire. Some people have it at 20,000 people, which would free up about $8 billion in free cash flow.
I mean, a lot of the process. Well, the thing is, like, what Oracle is saying is that they probably have some redundant positions that they've had for a long time that they can, you know, lay off to basically support the capex. I mean, this is this is one of those things that's like really hard to piece together, right? Which is firing people to spend more on GPUs. But I mean, that's exactly where we're moving into, and that's what everyone is scared of, that the AI is going to take my job. And apparently Oracle is saying, hey, the AI is good enough that we may not need as many jobs as we once thought, because so many of the processes have now been basically outsourced to AI. You know, maybe I don't need 30 people in HR anymore creating videos about why, why you shouldn't sexually harass your coworkers. Maybe I only need 10 people because AI can generate the prompt and create that video for you. Sorry, I'm talking about that because I actually have to do that training. I'm sure, dude.
Marvell,
I have some
by the way.
Yeah.
I was saying Marvell right here, 14%. I mean, it looks like if you're putting up really big numbers of growth expectations, the street likes it, except if you're Nvidia. And I think that's why Jensen was also pissed off yesterday.
Well, it's also because, I think a lot of people think that Nvidia is the only one that's going to win in the future when it comes to AI. But you do have to remember that there are other companies out there speaking, like the two main ones are, of course, Broadcom and Marvell, right? Who they're very Nvidia-like in that they do help the other guys design the chips. So Marvell and Broadcom, they help design AWS, this Trainium chips, the Maya chips from Microsoft. Meta has their chips. I'm not sure how that's going. Google's TPUs are pretty much all Broadcom design. So, it really comes down to, is it only going to be Nvidia in the future, or is it going to be some of these other guys that capture some value as well? So I think that, in my opinion, I think Nvidia, as far as I'm seeing, has a very big commanding lead, but that doesn't mean that like Broadcom and Marvell can't get some portion of the pie, in which case that does eat away from Nvidia a little bit. And, over time, dude, there's a saying that Jeff Bezos had. Do you know this most famous saying?
Your
from
margin is my
Bezos?
opportunity.
Yes, exactly. So if you have Nvidia getting 75% gross margins, that invites competition. That invites Broadcom. That invites, Marvell. That invites Amazon from saying, hey, maybe I can outsource a little bit and get some TPUs in here and not TPU, sorry, Trainium chips. I think they're calling it something else. Google, same thing. So everyone is trying to figure out how not to pay the Nvidia tax forever. And that makes sense, because every time you give Nvidia 75% margin, that means that's margin that you're not getting.
Yeah. And the quote for those wondering is, your margin is my opportunity. That is the quote that is iconic by Bezos. So before we talk about Robinhood, what are you buying right now? I imagine you bought Microsoft yesterday. Can you give us a little pitch of what you're thinking about Microsoft here?
I mean, Microsoft is fundamentally disconnected. Like, the valuation has dropped to like a 10-year low off of a stupid thing with SaaS getting disrupted. And for some reason, everyone thinks Microsoft is just SaaS. So they got sold off like crazy. And then this is like a 6-month long sell-off. So yeah, I think it was just overdone. And then when you look at the numbers on Microsoft with their RPO growth over the last quarter, it's phenomenal. So there's clearly demand there. The growth is not slowing down. So there are points in the market where things get technically oversold. And so when you have this fundamental disconnect, you lean in. It's not hard to estimate that. If you see earnings, like look at the EPS estimates, right? They're all going up higher, and their growth rate is actually not bad relative to the history, right? So you're fine. If the company's growing, fundamentals are doing good, and it's technically oversold, by all means, that's when you should be buying. When you have fundamentals deteriorating,
Why Microsoft and not more Amazon? Like, what's the reasoning for this one?
Microsoft's way more insulated, in my opinion, and they're deeper value right now relative to their historical multiples. That's why. Like, Amazon is good. The only challenge with Amazon is that Amazon has a lot more like, how do I say, like brand risk a little bit, where, their cash flows could theoretically like slow down and their growth rate may not keep up. But Microsoft is just like that stalwart that's been like the largest company on the planet for like literally like 40 years. There's no getting away from Microsoft. Amazon has had periods where they've kind of overinvested in things and haven't necessarily got a lot of ROI from them. And so people are a lot more mistrusting of Amazon than they are of Microsoft. So whenever there's a sell-off in Microsoft, if it's a undue sell-off, you typically get a lot more V-shaped recoveries in Microsoft. So,
well, Chamath just tweeted again. This guy clapped at me. I clapped back. We then spoke. So I funded his 2 daughters' college accounts. I hope the kids become better investors than their dad. But in all seriousness, I also think he was very mature in how he internalized our conversation onwards.
All right, maybe he's not going to get cancer after all.
I don't know. The thing is, you can't refund everyone who lost money on the SPACs, but you can publicly tell everybody you're sorry. And I think his unwillingness to say I'm sorry, it doesn't matter how much money you give back to individual people. Like, that's what people are waiting for.
Let me just show you the thing for Microsoft. Just once you see it, it's like, oh wait, this makes a lot of sense. If you see Microsoft right here, go ahead.
While Chris is doing that, put in the chat what you guys thought about the Robinhood event. Obviously, we'll talk about that. For someone who was at the event, it was awesome. It was great. I mean, the energy was there. It was exciting. I know they didn't introduce like massive, crazy new products that like oh my goodness, this changes everything. But also as they mature, you know, Apple can't release a brand new iPhone every single year. That's like really exciting. You're going to get these incremental updates. And even in the incrementalism, I thought the family stuff was really, really important. It's not going to, you know, double the revenues tomorrow, but I thought the updates we got across the board were pretty solid. And the Platinum card has created a lot of controversy. So we'll talk about that. But overall, I thought it was good.
Here we go.
Did you buy the merch? Yes, I bought the hoodie as soon as it went live. I can't wait to see the hoodie.
The one that makes you look like a construction worker, the safety hoodie.
No,
you know,
no,
that's the same color as the safety vest. Yeah, that's exactly what the construction workers wear not to get hit by cars.
Yeah, I wanted the bomber jacket, but it was $700. I was like, okay, I'm not spending $740.
Bro, that shit reminds me of my PT belt when I was in the army, bro. We had to wear, everywhere you go, you had to wear this stupid reflector PT belt. Like, you ever seen that before? You ever seen anyone in the army?
I think I know. Yeah. Maybe this is the one I got. Maybe we're thinking of a different one, but this definitely looks like
that's construction. Yeah, I mean, you put an orange vest on that thing, bro, you are good to go. You know, I actually got that bottle. I got that water bottle.
You got the bottle?
I got that water bottle because it was like 20% off. So it was like, yeah.
The chair was I think it's so weird, but it's also so funny. It's like a chair. It's like, okay. Look, and I think it will become a collector's item, literally.
It'll probably be a collector's item. Yeah. I wanted the stealth bomber jacket. I really like that, but that shit was way too expensive. It was like $300 something, man.
No, like $740, bro.
$740? Get out of here, bro. I'm not paying that shit. Get out of here. Shoot, I like Robinhood, but I don't like it that much.
I almost bought it, but then I was like, bro, $740 that's a little aggressive. So the 100, and you know, it's a jacket. The hoodie, you could wear in more places. All right, let's pull up this Microsoft thingy.
So there's two things to look at when Microsoft, right? This is the enterprise value to EBITDA for Microsoft. So typically, you know, in 2016, it was around 10. And since then, you know, as the business started to mature and their growth rate started to kind of go up. So you can see here in 2016, the growth rate was around 3%. It kind of got to about 14%. And it's been, you know, sort of hanging around that 14 to 18, sometimes like around 16, 15%. So, you know, like mid double digits is about where you're, not mid double digits, like mid teens is where you're looking at for growth, right? Now, there are periods of time where growth does slow down, and so you do get these drawdowns. So if you remember from 2022 to 2023, their growth went from 18% to 7%, and so you saw the stock drop. And one of the things that you do is you see the EV enterprise value to EBITDA also go down. So that multiple compresses significantly. So of course, around here, around 25, it was rather expensive, right? If you remember, was a fourth quarter of 2021, like everything was just super expensive. And when things started to go in the other direction, you know, everything retraced, and the most bottom it got was around 16 times. Okay. Since then, because of AWS growth and AI and everything else, it's kind of accelerated. And in 24, it was around 16, in 25 is around 15, and then right now in the last 12 months is about 17. And if you just go out further, you can kind of see that the growth is probably going to be like 16% throughout, right? So the growth is not slowing down, but what has come down significantly is this massive downward move in multiples. So this multiple is compressed significantly to like the 14. So in my opinion, this can very easily trace back up to the 20s. So that's a good 25% retracement from here. But then you also have to remember that this company is still growing its EBITDA significantly, right? So right. Just put all this shit away. So right now, the current EBITDA for in 2026, because they report in June. Let me just do. It's about 200 billion. By 2028, it's going to be 275 billion. Right. So you can see on a forward basis, they're actually improving significantly, and their growth is actually improving significantly. So the question then becomes, wait a second, like, why is it fundamentally disconnected? Well, one of the reasons why is everyone thinks that AI is going to disrupt Windows and disrupt Azure and disrupt all of this stuff. And so I think the general market sold it off. I think this thing retraces 25, maybe 30% higher, just based on a multiple re-expansion. And then you probably have another 15, maybe 20% to go from just pure organic growth going forward. So yeah, I mean, if you think about it, I'd say a 1-year price target of about 550 is not unreasonable, which case you're looking at a pretty significant discount to intrinsic value right now for Microsoft. And I think we notice it. I think a lot of people are going to notice it on the hedge fund side. I think this is such a big company that you're also going to probably see some rotation out of Google and into Microsoft, if you want to believe that or not. And the reason for that is, as we get closer and closer to OpenAI's monetization via IPO, all the equity investments that Microsoft has made into OpenAI are going to become a lot more visible on the balance sheet, right? So people are going to say, wait a second, this is worth X amount of money. And how much did Microsoft pull into this thing? How much money did Microsoft put into Anthropic? I think they have an ownership in Anthropic too, right? Yeah.
Microsoft, I think all the hyperscalers have some percentage, but Amazon and Google have the most topic.
Yeah.
You know?
So when it comes down to it, the total return for Microsoft is going to be pretty significant. So yeah, I think they're going to be fine. Like I said, it's Microsoft, for God's sakes.
No, I 100% agree. And I started buying at 413, have not really added that heavily to position, but I agree. It's Microsoft trading at 22 times forward earnings. But then again, I feel like that about all the Mac 7 outside of like Tesla and Apple. They are cheap. The Anthropic revenue increase to 20 billion and OpenAI coming out at 25 billion. What do you make of that? What should investors take away from seeing these private companies accelerate at that level?
I mean, it just goes to show that there's tremendous amounts of demand that's out there, right? Like, the one thing to keep in mind is this right here. Once you see this part, it totally makes sense. So this right here is to share the screen. This is the RPO growth. So remaining performance obligations for Microsoft. Last quarter, it jumped from 392 billion to almost 625 billion. Now, this 625 billion in RPO is over the course of the next 2.5 years. Okay. So you can see that Azure is going to be reaccelerating significantly. So the amount of demand that's out there for that compute, that tokens, whatever you want to call it from Jensen, it's there, right?
But
so
again, the pushback is this is all 50% of this is OpenAI.
Yeah, that's one of the challenges that you do have to come up. You have to realize that so much of this is Anthropic and OpenAI, but at the end of the day, you're also seeing a lot more adoption of models as well, right? So you're seeing everyone, all the applications that I work with in healthcare, they're all getting one, and AI being integrated into them. I've integrated probably like a bunch of apps with it, and everything now is AI. I'm literally taking classes right now on some of the workflows around how this thing could do that and this other thing. So every application right now, software application, has a component of AI starting to get built in it. And like I said, I can't speak to every single industry out there. I can only speak for the one that I work in, which is healthcare. And I can tell you the amount of demand for knowledge and the quickness at which people can make determinations because of AI is speeding up things in healthcare, and it's actually making healthcare outcomes better. It's funny, but
do you think OpenAI's revenue growth is a testament, as you can see on the screen right there, why we shouldn't be doubtful of the RPO of Microsoft? I mean, if OpenAI is able to grow, then they're probably able to pay Microsoft.
Look, if the value is being created from enterprises, healthcare industries that are actually saving money by utilizing AI, then yeah, this is a real thing. But if it's being generated by cat videos and people doing dumb things, then there's probably a bubble there, right? So right now, if you look at AI generated content, the one thing that I personally hate is I hate seeing AI generated content. Like some of it's just complete garbage. And a lot of that is sort of being subsidized right now. But I do see that there's a lot more real world uses. Yeah, like some right here, like a
Yeah, but that's pretty
unicorn
cool.
jumping.
That's pretty cool. Look at this gorilla, bro. Look at him. Look at that. That's pretty cool. That's not. You can't say that's not cool. Like
It's stupid, dude. There's no economic value to this other than maybe
there is
like
economic
engagement.
value. There's some, value economically, I think.
Whatever. The point is, like, this is it's ridiculous. But whatever. I if this is like just the fringe use cases, then that's fine. But if this is what basically the guides are all subsidizing, then we have a problem. So I think over time, people are. I think money is going to find its way into the markets, and it'll go into the right direction. My joy is priceless. You're right. It is.
Okay, let's talk about Hoodie. So I want your perspective as someone who is watching the stream. What'd you think of the announcement, the event, the products, all that stuff?
I like the concept of a higher tier card, but I didn't like that the benefits came with so many like restrictions on them. And so if they were trying to differentiate themselves versus like, let's say an Amex Platinum or Chase Sapphire Reserve, I think they fell a little bit short on that. Right. So the other thing is like platinum and silver. Most people can't tell the difference. Gold really stands out. The fee that they have, almost 695. It seemed attractive at first until you realize that everything came with like, what is it called? Strings attached to it. Yeah. And like I said, my initial reaction was, wow, that's really cool. $3,000 of value, amazing. But then you look at every single one of those things, and it's like, oh, travel credit only if you book with Robinhood Travel, where I'm sure that they're already marking things up versus buying it from someone directly. So, like I said, it's great, but there's nothing in it that made me feel like this is a unique thing to Robinhood that could really get me to like switch away from something like Amex Platinum. Like for me, one of the biggest benefits of Amex Platinum is one, the concierge service is amazing. The high credit limit is amazing. And also the lounges. Like I get access anytime I fly with Delta during the lounges. And here in Atlanta, we're like a Delta hub. So we have lounges in almost every terminal. Now you have something called the Centurion Lounge. Have you ever been to one of those? Do you have an Amex?
Nope. No, I don't have an Amex. That's like what, $8.95 a year, right?
Something like that. Yeah. The amount of people dude, I'm surprised that you don't have like a business like Amex, bro. The amount of points that you could be racking up with that.
I travel a lot, but the 3% on Hood has been my thing for the past year. And it probably might make more sense to have an Amex, but that 3%, I feel like I'm getting good. I have a United card, which is good for miles.
The best way to utilize these cards is you use them, get the points, and then use the points towards upgrades to higher things. So like for me right now, I get points, but then we can buy the ticket regular price, but then upgrade to like first class or business class. And you get like almost like a 6 times more return economic value per point spend if you do it that way. So that's the best way to maximize your benefits. So like let's say you want to take, like for me, my parents are always going to India. I probably buy them a ticket, but then like get them like an upgraded to like a higher cabin class or whatever, or do something like that. That would actually make a lot more economic value out of it.
What about the family planning stuff? Did you think that was cool?
I don't have kids, so I don't really need it, but I'm sure that people who have families, that'll be very helpful to them. I do like that you can transfer stuff to custodial accounts directly. Like you don't have to be a family member, because I do want to set up some brokerage accounts for my nieces and nephews and for my for my like friends, kids, and just be like, here you go, here's some shares of Microsoft, here's some shares of Adobe. I could buy you a birthday present, which I'll still buy them a nice birthday present, but I also like to give them something that, like makes them realize that there's economic value. Like the one that I would love to, I really want to train my niece. And I want her to become like the next Stan Druckenmiller. Like she is so smart. She she was doing like a lemonade. I'll tell you a fun story if you got 5 minutes.
Yeah,
She was doing like a lemonade stand in her neighborhood. And one of the things was there wasn't a lot of people coming. So one of the things that she did, she was just like, listen, if the customers aren't coming to me, I'm going to go to the customers. So she just loaded up, her little sister in the back of like a cart, got all of her supplies there. And she just went door to door in the entire neighborhood. Like, hi, would you like some lemonade? And bro, she sold out within like 2 hours. And I was like, that's a good idea.
Hustler.
This kid is a hustler, bro. Like, who's gonna deny it? So she did two things. One, she went door to door, because it's like, oh, who doesn't like lemonade? But the thing is, if you don't get out, you don't notice that there's a lemonade stand. So she did that, and then she did the marketing ploy with my other niece, who's like 3 years old, and it's like, how can you deny a 10-year-old and a 3-year-old, little girl? So she guilt tripped them into buying the lemonade. And yeah, she sold out. So it's just, she's got an entrepreneurial spirit, an entrepreneurial mind. So my brother is also an entrepreneur. So, my thing is I want her to understand how the markets work. I want to basically take all the knowledge that I have and eventually transfer it to her so that she can learn this stuff at a very early age. And she doesn't have to make the mistakes that I made when I was younger, and that she's got like a head start. So by the time she's 18, she's already got, a portfolio of assets that she knows like, oh yeah, I can buy this, I can do that, and hopefully I can teach her how to do spreads. I don't know if those custodial accounts allow for spreads because you kind of need like investing experience, right? So I don't think they'll give her like tier 3 options for a 10-year-old. But we'll see.
It's probably a good thing for a long-term account, but that's hilarious.
Nah, bro. She's young. She's like super young, which means that you need to apply leverage. This is the time you take that lemonade stand money and put that shit into Amazon stock or Amazon spreads, bro. Why are you going to go with a 10, 20% return? Why don't you get 100xer?
My take on the Robinhood event was, again, the products weren't like massive, banking or credit card like they were a couple years ago. But I do think the good thing about this event is that they once again reminded the street, we are not just a trading app. Nothing in the event had to do with trading, options, crypto, none of it. It all had to do with other parts of the financial super app thesis that, look, we analyze the price on a day-to-day and like, it's annoying. It goes up, it goes down. If Bitcoin went down to 65 today, Robinhood probably would have been down 8%. So that's not as relevant to this event. But you look at this event from now to 10 years from now, these are the types of products, families, trusts, platinum, diversification of the business, that's going to make this thing. I think it's going to become a $1 trillion company. I don't know when that's going to happen, but I do think you don't doubt that level of innovation that they are pushing against. And the more they do that, even in the years where the stock's not going up and it's the best performer in the S&P, it will compound, which is why, I don't know, I'm very, very confident in the company, even if the short term, the stock is not really moving.
Yeah, I think if you think of the business model, like just pull this up, look at IBKR, right? IBKR is probably one of the more newer brokers relative to something like TD Ameritrade and Charles Schwab and everything else, where like a bunch of mergers together. So just look at IBKR and do like a 5-year analysis. This is or you could do even Max, right? You can see that this is a business that compounds itself over a long period of time. And so I think this is similar to what we're going to probably see with Robinhood and some of the other brokers, where I think at some point, the amount of people that are going to be investing is just going to keep growing. And I think a lot of the markets here in the US might be a little bit saturated. So I think if Robinhood really wants to grow, they're going to have to follow the IBKR route and actually go a lot more international, because the amount of people internationally looking to basically be in the markets is probably pretty vast. So as much as I'd like to see them provide good services here to US, I think that they could actually do very well in terms of future growth being in other countries, you know?
Yeah. And again, it's going to take time, but like you just, even the fact that they threw an event and they went with this whole pilot theme and take flight. And then Vlad, I thought the cutest thing was Vlad brought his kids on stage, because in 20 years,
Yeah.
those kids are going to look back on that moment. They were in front of hundreds of thousands of people with their rock star multi-billionaire dad. They have no idea how big of a deal it is. And then, you know, his son had that cute line about, I want Google, not Tesla. Like, I think
Oh,
that was such a
dude,
cool-
that was awesome, dude. When he said, oh, do you want to share us a Tesla? And he's like, no, I'll buy Google instead. I was like, bro, this kid is smart. He's already ahead. He's already absorbing things, you know? Yeah.
Yeah. I just think it's so cool. And again, their willingness to even do multiple of these events. By the way, the events are fun. Like, you meet people, you talk. I got to meet a bunch of you guys that were there. You get to see people in person. Like, the employees are so friendly. You know, they want to talk to everybody. Like, it really builds a community, but that community also gets together 3-4 times a year because they're pushing new products into the world. And I think that's why, you know, they will continue to compound even if they're more volatile than your average stock.
Yeah. I think right now is a good time if people are really like trying to outperform the market. Just look at all the stuff this year that you know is doing really well with cash flows, but the market is just not recognizing value. And it's SaaS. Just be in SaaS. You'll be fine. Like, I think at least until the summer, SaaS is where you want to be. And you don't have to go crazy and buy like the shittiest small SaaS companies out there. I think buying Microsoft, buying Amazon, it's like, you know, there are times, Amit, where things are just a fucking no-brainer. And like, instead of trying to like create this whole like, oh my God, I need to come up with this massive thesis, I need to believe in the company.
Dude, I agree. The Mag 7, X Tesla, and Apple are so obvious. Now, it's boring. It's not like some $3 billion company that's going to be $6 billion, but like, it is obvious. It's not, and maybe they fall to a 10 PE or an 8 PE, whatever. If that happens, I mean, like, the market collapsed. But it is obvious.
The growth is there. That 10 PE will get bought up by every idiot on the street. You know, so I think at this point, SaaS is pretty much bottomed. So, you know, I know some people are saying, oh, it could go lower. Okay, if you want to wait until maybe another 5-10% for correction, by all means, go ahead. But I think the sell-off in SaaS is pretty much all done. I think at this point, you buy any of those SaaS names, you know, like I said, you don't even need to buy like speculative SaaS names. You could just buy the blue chip stuff, you know. And
you don't need to buy Zeta.
Yeah.
Salesforce is way safer than Zeta, you know, just as a company. So
but let's say Salesforce, like, people keep, you know, dogging Salesforce. Just stick to Microsoft. You know what I mean? Like, it's Microsoft. Where is Microsoft going? Please tell me. Microsoft is going to get disrupted. You know, I could understand if people will say, oh, I think it's like Salesforce is risky. Hell, even ServiceNow is a little risky, blah, blah, blah. Oh, I don't believe in Adobe anymore. Okay, fine. But last time I checked, it's Microsoft. Their RPO has basically almost doubled. They have equity investments in the fastest growing companies on the planet right now that are going to be IPOing in a year. Like, you can't get any better setups than this. But yet, this is where we are.
Yeah, it is quite incredible. 3 months into the year, we got oil spiking to basically 52-week highs. We have SaaS bottoming to decade-level lows. We still have tech being shorted at the highest level since 2016. And then you've got Nvidia putting up the greatest earnings in history and not catching a bid. So it is still a stock picker's market, as you say, but there are a lot of opportunities if you can find the right name. And the right name might not be that hidden gem. It might be right in front of you. Like,
I mean, this eerily feels like Meta in 22 when that shit was like 8 PE on Meta. I mean, you have a company right now that was just growing insanely. I mean, they got a little bit too happy with spending money, but dude, any of these companies, like let's say Amazon, Microsoft, they guide for a little bit less in capex spending next year, and boom, automatically everyone re-rates these things higher, right? It's just everyone got scared of this capex spending. So I I don't necessarily see too much downside, but I see a lot of upside. So when the odds are in your favor and it's so obvious, you don't need to, like I said, you don't need to like gamble. You know what I mean? Like there's times where you gamble and then there's times where you just ride the wave, and Microsoft is, and here's the thing, the worst you're going to do with Microsoft is you're going to underperform for maybe like 3 to 6 months. Whatever. Shit, if Microsoft is going down, trust me, the entire market is going to go down. And Microsoft is already low enough to the point where it going down further is very slim compared to the rest of the market. So I'll stop with that.
Someone asked, given you're in the healthcare space, do you have any healthcare AI names? Or how do you think of that?
They're private. They're all private. They're all private. The one thing I'll tell you is all of them use either Azure, GCP, or Microsoft or AWS. They all build their applications, HIPAA compliant applications in the cloud. That is how they're doing it. They're using Amazon Bedrock. They're doing Azure. Everything is, they're using Google's Gemini, Vertex. Everything is in the cloud. Everything is in the cloud. There are no applications that I'm integrating right now that are on-prem because you can't do AI that well on-prem. You can do it really, really well in the cloud. You can't do it on-prem unless you're willing to spend the money on the hardware and all this other extra shit. You don't need that. Everything, all the AI applications, they're all being built on the cloud. So you pick any of those hyperscalers, you'll probably find a myriad of healthcare applications that are out there. So I don't know.
And you still have a pretty big meta position as well, right? I imagine your conviction on that is very strong.
That has not changed. That has not changed. Someone is talking about Epic. Yes, Epic right now is integrating a whole bunch of AI. Who did they partner with? Amazon. I think they partner with Amazon or Microsoft. I don't know. But the point is, all of them, every application that's being built for healthcare, like right now I'm integrating a couple of applications. Like one is called Viz AI. Okay, Viz AI, our entire infrastructure, you know what it runs on? AWS. The entire thing is on AWS. By the way, another thing, cybersecurity. Everything is also secured via CrowdStrike. Every single one of our endpoints, CrowdStrike. So cybersecurity ain't going nowhere. These guys ain't going nowhere. Everything is built in the cloud. And cloud naturally is going to grow 15% compounded for the next infinity years. I'm being serious. I really don't know what else to say. I mean, I checked every Gartner report. Cloud is going to grow 15% compounded for the next 50. I don't know, to the end of time. Why? Because there's always going to be more need for compute. There's always going to be more need for analytics. There's always going to be more applications. There's always going to be. We are in a world where we generate more data today than we've ever generated in the history of time. And I don't think we're ever going to get to a point where we're not generating information anymore. Everything has to be stored somewhere. All that data has to be stored somewhere. All that data has to be processed somewhere. All that applications, they're all being hosted somewhere. So even if I, let's say, develop an AI app, you think I'm just like, oh yeah, download my app and upload it to like your computers or put it on an on-prem application server? No, everything is cloud. You need cloud.
Well, that's where the world is. And that's also why the hyperscalers cutting down their capex argument is not as strong. Just given, they're going to need to support all this growth. What do you think about Tempest? Tempest AI, right?
I haven't done enough research on them.
Yeah, they're the only other healthcare AI public name that I've actually heard of. All right. That is it for us. Chris, thank you for joining again on another Macro Thursday. Chris will be at the LA meetup on March 28th.
Yes,
so if you have not got your ticket, I'm putting the link in the chat. You can grab your ticket. I'm very, very excited to see everybody there. I'm putting Chris's Twitter in the chat as well. You can follow him there. And yeah, we got one more day to end out the first week of March. I mean, already March is going a bit better than February in certain sectors. Obviously, the broader market is not fully recovered, but the choppiness of this market, it can't be undermined because you just don't know what's going to happen. We had a war breakout over the past 5 days as well. So we got to figure out how to get through it.
Let me just show you guys this thing real quick. Just take a look at this. This is the workflow for one of the applications that I work with right now. Okay. right now, you come into this hospital with a stroke, you get evaluated by a doctor, a CT scan is done. That CT scan, that images come, they go directly to, like, this is how it worked before. Okay. All of this stuff had to happen like before you got taken care of, right? Now everything is all done on the cloud. All the results, everything is literally transferred to the stroke team on their phones. Okay, everything runs in the cloud. Let me see if I can actually find that architecture. Let's see.
Again, the reason Oracle made a move today is because it looks like they're going to be cutting a lot of jobs. That's why that's pumping.
Damn it. I have this diagram, but it's got all of my application servers and everything, so I can't share that with you guys. But basically, everything when it comes to healthcare now is done via everything's on the cloud. Let me just stop there. I have like the network diagram for my facility, but like I said, there's too much like information on there that I can't share. So, but yeah, overall, just hyperscalers, man, great business model, not going anywhere. There's going to be more compute than ever before. There's going to be more data that gets integrated into them ever before. And every one of them, they generate two things. They generate storage fees and they generate computing fees. And they'll make money. It's a great business. That's why they're spending so much money right now to build out all this stuff. None of the stuff that they're building out is over capacity. And if they do have over capacity, they literally are just going to not build for a year and boom, all of a sudden now they're going to be capacity normal again. That's it.
Yeah.
So, yeah.
I agree. I think the hyperscalers are simple. You don't have to be super fancy. And I think we'll look back 12 months from now if we do not end up in some massive bear market, which again, it seems unlikely. That these names are going to be higher from now. I mean, Meta already proved it when it went to 740 and came back, right? It's like teasing you when it comes back. Same thing with Nvidia, 200 to 175, but you know where they're going as they put up these numbers.
Yeah. Yes, sir.
All right, folks. Thank you all for joining. Again, sorry I missed the morning, but I think the reason will surprise you guys, and hopefully you guys will enjoy the podcast. I'll be back tomorrow for the morning. Steve will join the close tomorrow. We'll drop the podcast right after the close tomorrow, so around 5 p.m. And I'll see everybody tomorrow morning. Keep going from there.
Gotta go do the dishes, bro.
Dude, like, are you trolling, or are you actually not doing the dishes?
No, I've just been piling them up. I'm running out of chicken too. My wife marinated all this chicken, and I've been putting it in the air fryer, and I gotta clean the air fryer now, and I am not meant for domesticated housework anymore. My wife has been taking care of all this stuff for the last couple of years, so now I've gotten used to that. I'm having separation. What is it called? Like separation anxiety. I have separation anxiety as well. So if she's watching,
you don't have a dishwasher.
You don't even know. I don't know how to use it.
Oh,
I don't know how to use it.
Oh,
she tried to show me. She showed me a couple of times how to use it, but I don't know. I might just hand wash everything. You know, whatever. I do know how to do the laundry, so if I run out of underwear, I'm gonna be okay. But you know, she's coming back next Monday. I'm supposed to keep the place clean, and I thought I could make it last until like Sunday, and then I would just do like a cleanup storm on Sunday. But I didn't realize just how fast dishes pile up. So I gotta go do the damn dishes. Easy, right, fill up dishwasher, wait a few days. Later, guys.
We'll see you guys tomorrow. Bye, everyone. Have a good one.